Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. Today's date is Tuesday, May 26th, 2015. Markets are taking a beating today, down over 1%. You can see before you the SPY down 1.1% or $2.36, just off the lows of the day here around 1:20 p.m. Eastern Time. Now, the key is this. Over the last 2 weeks, I pinpointed a turn in the market, which was scheduled for today. The turn was from upside in the market to downside. All right, you can check with any member out there via the daily analysis videos that I would do for them as premium members in the Research Center, No Hype live broadcast for the Research Center, and the intraday stock chat here at InTheMoneyStocks.com. I said it pretty much every single day for the last 2 weeks. Market would trade up into the holiday weekend and then start its rollover. Now, how much of a rollover are we talking about here? Well, analysis and pinpoint accurate calculations points to about a 5% pullback over the next 2 weeks. All right, now there's a possibility it could extend itself more, but right now 5% is what we're looking at. Already today 1% to the downside. If we take a look at the daily chart, let's go to the daily chart on the SPY now, and again, let's just flip over to that here real briefly, and again, just go here, and from the 10-minute over here, let me just bring that up for you guys. All right, so again, there we go to the daily chart. Notice again, you had a bunch of updates. Look, 1, 2, 3, 4, 5, 6, 7, and then today we wiped those out and essentially are kissing a gap fill here. Now, this is a huge level, but bottom line is, anytime you see a market that starts to have quicker falls where it negates literally 3, 5, 7 trading days prior, that's a market that's getting ready to roll over to a larger amount. That's a key technical analysis point that I've studied in the past, and it's very, very accurate. And you can really see it over the last few months since kind of late December. See these falls here, and then it would rally back up, and this was a pretty sharp rally back up, so you know it's not quite done yet. Then you fell again, sharp rally. Then you fell again, sharp rally, all the way up here, made a new high. Fall, sharp rally, fall, sharp rally. Now, here's where it gets interesting because, again, the market slowly floated up to new all-time highs, and then it's getting pounded today to the downside. That's an alert that I want to pay attention to, and again, it's coinciding with the turn here in the markets for about a 5% plus correction. Couple other signals here that I'm paying attention to, folks. Notice this trend line. Let me show you a couple different lines that I'm watching. Okay, number one, you have this trend line right here. Okay, so if you connect this gap right here to this low, to these lows right here, low, low, and low, this is your key watch line. So we're not there yet, but I expect by later this week we should be into this line. And if it breaks, if you see it break to the downside, you're going to go all the way down to this 200 moving average. Guess where that is? The 200 moving average is at around 203, 204. From the highs here of around 213 plus, a correction of that magnitude would be approximately 5%. So that tells you that's where the market has its pinpoint level headed. Okay, so if it hits that, then we need to reevaluate to see, are we going to get a sharp bounce back up, or are we going to see more downside? Okay, it's very possible we could see more downside. So don't be surprised if that's the angle that I take at that point, but we need to see what happens, first of all, at this upsloping trend line right here with the 50 MA, and then once it takes that out at the 200 moving average, what occurs at that point? What are some of the things rattling the market? The Federal Reserve has come out today. President Fisher said, don't be surprised when the interest rates go up. So that's one factor. We got some economic news this morning that pointed to a potential for an interest rate hike a little bit. And then also the Greece situation. The Greeks have a bond payment that is due next week. If they can't make it, we could see a epic kind of freak out in the markets for a short period of time while we're dealing with that. All right, bottom line is, guys, take a look at the track record. Go to the Research Center track record. Check it out. Unbelievable gains continuing. Today, the options alerts just continue to rock and roll. JP Morgan, we had puts on that, and we took them off the table today for a 42% gain, guys. Think about that. Think about knowing to short JPM right up here utilizing puts and making 41% on them within a few days. I mean, that's really all it took. Just this little down move right here, 42% gain, actually. Okay? So bottom line is you can check out the track record of the options alerts, the Research Center. You want stock trades, Research Center is your game. If you want options, the options alerts are your game. But bottom line is, the methodology, the PPT methodology, is kick-ass. It works. It's proven via the track record that we have third-party verified. Bottom line is, come take a 7-day trial to the Research Center or sign up for the options alerts. Take care, guys.